coronavirus outbreak has wiped more than 16 trillion US dollars off the global stock market.
Your company is now bankrupt. Our economy is in a state of crisis.
Did you miss the Adipurush collections are falling and the movie is almost now considered to be a flop? And there are many reasons behind it, but just to give you a sense of how
Internet trolls have called for a boycott of Amir's film due to his past comments, namely the intolerance remark and the PK controversy.
Have you ever lost money in the stock market? What if I told you that Bollywood is an even bigger gamble? Today we compare two high-risk worlds, investing in stocks versus investing in movies. Which is riskier? Let's find out.
Well, before that, I want to tell you that this is only for education purpose and not as financial advice at all. The data used in this video is taken from the various printed media sources and being used by me for purely education purpose.
Both Bollywood and the stock market can make you rich overnight or leave you with nothing. In stocks, investors hope prices will rise. In Bollywood, producers bet crores on the movies, but which investment is the ultimate financial risk? Let's break it down. The stock market is full of ups and downs. It has made billionaires like Rakesh Jhunjhunwala, but it has also wiped out fortunes overnight. If you bought Yes Bank in 2018, you would have seen your 1 lakh turn into 10,000 within months. What are the key risk factors in stock market? Let's see. Market volatility. Price fluctuate due to news, economy, and global events. Pump and dump scams. Fake stock hype leads to crashes. For example, PC Jewelers and many more in recent times. Retail investors panic. People buy at highs and sell at lows. Insider trading. Big investors manipulate prices, such as Ketan Parekh scam few years ago. Now, let's talk about Bollywood. Every film producer is like a stock market trader, betting crores, hoping the film becomes blockbuster. But just like stocks, hype doesn't always lead to success. Remember Adipurush? It had a 500 crore budget but lost over 200 crores. Key risk factors in Bollywood. These are unpredictable audience. Even big stars don't guarantee success. High budget, no recovery. Movie flops means full losses, no refunds. Fake box office numbers, paid media hypes of weak films. Over-reliance on stars. If the lead actor's image is damaged, the movie tanks. At least in the stock market, you can wait for recovery. But if a movie flops, it's game over. Now, let's see one by one risk factors in stock markets and in Bollywood. In stock market, the risk level is high, but in Bollywood, it is extreme. In stock market, the investors are traders, retailers, institutions. But in Bollywood, producers, studios and investors are the one who invest. In stock market, we can expect 10 to 15% annual long-term returns. But in Bollywood, our investment can become 10 times or total loss. In stock markets, the loss recovery is possible through diversification. But in Bollywood, there are no refunds if a movie flops. In stock market, manipulation happens in the form of insider trading and pump and dump scams in stock market. Whereas in Bollywood, there are paid reviews, fake box office numbers and whatnot. So, while both involve risk, Bollywood has no diversification. One flop means full loss. In stocks, you can hold on to a good company and wait for recovery. Whether it's a stock or Bollywood, manipulation is everywhere. The difference is, in stocks, SEBI can investigate, but in Bollywood, no one cares. So, which is riskier? The answer is clear. Bollywood is a much bigger gamble. In stocks, you can invest wisely, diversify, and recover losses over time. But if you invest in a flop movie, you might as well burn your money. At least in the stock market, you have Warren Buffett. But in Bollywood, no one can save you from a disaster. What do you think? Would you rather risk money in stock or Bollywood? Comment below. And for more crazy finance content, don't forget to subscribe, like, and hit the bell icon. See you in the next video.